All right, let's go back into it. I've been moving house. I've been very busy on that side of things, real life questing. And now it's time to get back into the YouTube side of things. And so, a video on the current state of the markets. All right, so we'll start off first of all with, the fact that I think it's probably worth addressing. The bullish argument was wrong. Right? The bullish argument, the bullish thought process, not right, incorrect. We broke down through the structures that I was looking at. Markets failed on the higher time frames. We lost daily structures. We lost 3-day structures. We closed below weekly lows. Market changed. Market flipped. And unfortunately, that's not been helped by the world of TradFi. The world of TradFi has been aggressive in its selling, especially over the last kind of 2 weeks or so, and has also broken down through some significant levels, which have now got a direct impact on crypto and obviously the landscape that we're faced with from kind of an economic situation as a whole. So I want to take us through certain areas. I don't want to get too deep in my kind of thought process here for where we are on kind of, the macro scale, because macro scale guessing is probably going to be about as successful as my bullish thought process on some of the markets before the sell-off. So what we'll do is we'll start a little bit with like BTC and just kind of catch up in terms of where we've been and what's taken place in the price action that we've seen since. And BTC, the problem that we have now is this higher time frame level at 92,000, and 92,000 after the level was lost on this significant selling on kind of the end of February. It's flipped into a resistance region. Now we saw the very aggressive rerun candle of this, where it just changed into resistance. And unfortunately, this kind of came with all of the hopium around the strategic reserve and everything that was being established on crypto side of things. And we all thought everything was going to be great. Smacked into resistance, President Xi candle style price action, and unfortunately the next day everything ran it back down. ETH was down past the initial kind of low created by the end of the day. It was a shit show over the course of 48 hours, but BTC is using that level as resistance. 92K is a problem for BTC as it stands. As you can see at the moment, we've now taken the low of that very, very aggressive selling day, and we've traded down towards the 77s, with obviously the line in the sand now being down towards this 72, where we'd be hoping to see a more significant reaction. RSI is not particularly pleasing for it either. Reset up at the 50 level when we got that big kind of strategic reserve announcement on the Sunday, low liquidity setting, and rallied very aggressively, blew out all the shorts, reset the RSI, and now continuing that downtrending action. So the 3-day is a problem. So what we have through there now is really the argument where we're talking about how do we play into strength in this market, or how do we determine value on the downside? Value on the downside is easier to determine because it's just subjective and dependent completely on the individual involved. Basically, if you're looking to buy BTC, you need to think about why are you buying BTC? What's your time horizon? What's your investment pattern like? What are you looking to achieve in what, over what period of time? Lots of different variables that will have an impact to whether or not you want to be purchasing BTC at 79,000, waiting to 72,000, thinking about lower, buying higher, whatever it might be. When it comes to like a technical and a trading situation, now that we have the clean break of 92, and now that we have the clean area of 92 becoming that resistance point, we would be looking for reclaims in order to feel higher time frame bullish again. Okay, this would be the area we'd be looking for. Reclaim 92, higher time frame bullish. The other area that we can obviously take position into is any moves in towards the 72K, and then we'd be looking for basically us not falling down below here on any meaningful time frame for closes. So we can tap into this area, and that's going to provide us very good risk reward settings in order to be able to try and get long on this. And again, you need to consider if that's like a leverage trade or a spot trade and what you want to do with that at the time. But they're basically the two situations that we could look at from where we are right now. From a higher time frame perspective, this might chop around through here. This might bounce around through here, but we know that now even the higher time frame trends are geared towards the downside. So we still expect the strength and all of the aggression to come via the downside on these markets. And so just want to be in a situation really where we're aware of that scenario now that we have those very clear fixed confirmations of the market trend and the market direction on the higher time frames. And yes, before, sure, you could say, yeah, it was, it was obvious. It was, we had a load of weakness come in, we broke down through, the big selling and everything else. Unfortunately, at that point in time, we'd still not lost major structures on a lot of things. Like, of course, when we were talking about really Sol, BTC, and ETH is what we focused our discussions on. And ETH's low was the 2,500 low, and that snapped. And, Sol as well, obviously, with everything else that's been circulating on Sol in this little patch of time where I've been less active on YouTube, and we've seen the weekly low snap on there as well. And that changes the decision making, okay? So despite me being bullish around those areas, I think rightly so around those areas, it still presented the best risk reward setups. But now it's time to face the reality of where the markets have clearly led us to and what we can see in terms of the thought process coming through there. And really, it's this traditional market pattern, which is where I've been spending the majority of my time, that really is the one that is the very awkward situation for us right now. We'll start on the 4-hour through here, and I'll kind of go to highlight some of the kind of poor action that we've seen on this market. So obviously you can see here, basically since that Friday, 21st of February, we've just been aggressively selling off. Very, very aggressive through here. You can see down here, this divergence marked out. And one of the things that I posted about today was saying that if this divergence starts to fail, we've got like a real problem here. Because divergences like this, and especially on the indexes, they're very, very strong. And whenever divergences invalidate, meaning that we see RSI pushing past into kind of fresh lows again, or the awesome oscillator creating this fresh low down here, that's usually as a result of very aggressive selling. Right? So divergences we expect to hold, especially on an index perspective where, they're very strong signals. But when they invalidate, it's usually as a result of, and typically speaking, it's the result of an event. It's the result of someone saying something or not saying something, or some sort of policy shift or some announcement of some kind. And so the market responding in this way is usually a really negative sign when we end up actually not being able to sustain these divergences, and we just end up selling off into fresh lows all the way through them. So the indexes are very concerning. We also have, from an index perspective here, just kind of the look at SPX here. This is very, very similar to the way that BTC topped in 2021. Obviously, the index is topped in a very similar style as well. This losing of momentum all the way through here, and we can see the same structure that we've got through here as well. So this is what ended this uptrending structure here on the indexes. It put us into what was around like 7 months, I think. Let's have a look here. Yeah, 7 months or so, 8 months or so of downside, and just pretty poor price action in terms of what we actually achieved. Now, I suspect we're in a similar situation through here. I suspect that the indexes are still at the point of playing out this divergence. This divergence is very rarely played out when we're kind of at a stage like this. We expect to see a crossover on the awesome oscillator and the RSI significantly losing the 50, which obviously we're getting as this weekly is currently in action at the moment. And then the same obviously is true here on the NASDAQ. And the NASDAQ really is a good reference point through here, because what the NASDAQ shows is us that this structure that we had here, we're doing a very similar thing here, but with absolutely zero strength in terms of retesting the low. So back here in 2021, we ended up breaking down through the low as 2022 started. We lost this low here finally at 14.8, sold off, rallied back into it twice here, both, very quickly. And then after several weeks had passed, and then this just became a resistance point for us before, trading down nearly 40% into the lows, and then getting the rally from there. And if we take a look at just similar numbers, it's not really a case of like calling for it. I'd be more than happy if it gave this sort of correction. But when we start looking at this, that puts us back down towards the sort of 13.5 Ks on the NASDAQ if we were to get a similar sell-off that we've seen here. And again, keeping in mind that this is over the course of 8 months or so that this actually took place. It isn't a case of this just being like, one sell-off done, minus 40%, everything goes back up again. So the NASDAQ has lost the low. That's a significant structural shift in the NASDAQ. When that happens, it tends not to be positive. And especially when we have these divergences that are playing out like we see here on the Awesome Oscillator and the RSI back in 2021, and also now that we're experiencing 4 years later in 2025. So not a particularly good sign on the TradFi side of things. And we know that the majority of these markets are up significantly still. We know that a lot of these markets still look absolutely ridiculous in terms of the way that they are, the way that they look on weekly charts and monthly charts. Okay, so some of this downside is certainly not without there being signs of these markets potentially weakening and slowing down. And today, actually, aside from invalidation of that divergence structure with the triple lows that we saw, was a very aggressive day for the markets in terms of selling off. Tesla was down 15% today. That's a monstrous total for Tesla. That's 55% down in 2025, basically. Okay, so that's right from the all-time high, which was mid-December. So over the last 3 months, we've done 55% downside on Tesla. Like, this shit is puking hard. Apple was down 6% at one point today. And again, that's another significant sell-off for something like Apple to be down to that degree. So markets really, really struggling here at the moment in terms of what we're seeing on the traditional side of things. And then obviously that's having an impact to the crypto side. And we saw a little bit of that this weekend, where we saw on Friday that the NASDAQ had lost the low. We saw that the indexes had lost their structure. They'd broken into a fresh low for the first time in a long time, 4 years. And the impact on crypto really wasn't felt until Sunday night. And Sunday night is when these markets then started to put in this aggression to get these sell-offs and get these weekly closes looking pretty disgusting down here, and kind of undoing what we thought was a positive wick the week before, and seeing that aggression in the downside. So what I want to say about the current environment is that, look, I'm not going to be here and say like, it's time to sell everything. That's completely down to individuals involved in your own thought process around, what time frames and spot holdings and risk look like from your perspective. But the environment has changed. The environment isn't one where I can sit here and say to you now, look, we're still holding on to weekly lows. Yes, the markets don't look great, but this is a really good kind of area to be considering the market. We're not at that point anymore. And this market will bounce. All of these markets will bounce. Crypto markets will bounce. The TradFi markets will bounce. We will see movement. We'll see that upside again. And you can see here from when we were looking at that NASDAQ region, there were plenty of significant bounces throughout this region. There were plenty of areas in which the upside can get value. There were plenty of areas in which you'll turn around and look at a video that discussed the downside on the indexes, and in 2 weeks' time, you might look back at this video and think, what a fucking loser. He was like talking about the NASDAQ going lower here. And now we've bounced. Yeah, the markets are going to bounce. The markets are going to do this sort of back and forth price action. The one thing that we know now for sure is that the markets have changed their structure. And we know that. That's a definite. That's not me sitting here saying last time they hadn't yet broken lows. They have now. Lows are gone. Okay, the environment and the nature has shifted. I still believe that the indexes have not played out the divergences. I still believe they are on the way to playing out the divergences. I think that will come to some sort of climactic ending, whether or not that is news related or whether or not that is just purely price action related and the impact that this will have. There's a lot of discussion at the moment around credit delinquency. There's a lot of discussion that will therefore take place around regional banks again. There's a lot of discussion that will take place around credit lenders. And so you've got some of the catalysts in there as well. But the market will bounce, but the outlying and the underlying trend has been determined. That trend, that weekly trend, is no longer a, can this survive? Can this hold the low? We might be okay as long as we can hold the lows. The structure is still fine, and forget all of the kind of beta YouTube titles. The structure now is one of a downtrending structure. The indexes is now one of a structure that has broken a low. We might get a rally to a lower high. That would be nice. That would be nice to give some upside relief. But if the indexes are still in the process in which that they are still undergoing the play out of this divergence, then I think that it would be wise that we could still expect cheaper prices on BTC. I think, when we're looking at this area here now, I think that obviously this makes a very clean retest. Clean retests in crypto, not usually that great to be able to action because everyone's looking at them. But at the same time, the risk reward of being able to action here also makes sense to be able to do that. If we're looking for strength in the markets, we're waiting for reclaims of some of the levels that have been lost. So as it stands right now, poor market conditions. And everybody talks about kind of like survival and protection in these times, but I think it's really important. I've been actively shorting the market for a little bit. I managed to get the top in the haven of the indexes, which was a nice one to be able to action. I've managed to short hype effectively, and basically just trying to take downside plays when the market makes them available. But when it comes to the money being made, the money is still made on the long side, but the money is not made on the long side in this environment. When the markets have finished and concluded their selling, whether or not that's sort of at this climactic point or whether or not that's just simply length of time for downtrending until conditions change, there's going to be huge discount available. And that's really what you're looking for at this moment in time. You're either saying to yourself, look, I see value here because I'm going to be an investor in BTC over the course of the next 5 years, and I expect BTC to be trading higher than 79K in 5 years' time. Or you're going to be looking at this market and saying, look, I'm not quite ready to buy yet, but if we start dipping towards this 72K area, I think that represents value for me. The money is still to be made on the long side. It's just not here. It's just not at this particular moment in time. But when we get the conclusion of these discounts and these cheaper prices, that's when things start to get interesting again. So I'm going to be back in action now, going to be putting out a lot more content again. Going to be allowing you to use me as a counter indicator in terms of the bullish and bearish nature of my views. But as I said, as it stands right now, there is no denying the way the current picture looks. The last time I could sit here and I could bait you with all the YouTube titles and I could say, yep, bulls are still in control. Here's why I'm still bullish, because the structure was still there. The structure isn't there anymore. And we have to deal with what we have in this situation. We have to deal with the reality and the facts that the market presents to us. And they are unfortunately the facts that we're being presented with right now. So we'll see what the bounces have in store. We know that we need to be buying into strength probably in a lot of these markets. And we know a lot of these markets from a crypto side will never see the light of day again in terms of popular conversation. Welcome to an environment that is significantly different to the highs that we've been enjoying before, but an environment that represents a huge amount of opportunity, an environment that represents a huge amount that's going to be on the table for people to be able to scoop up at various intervals. So don't be disheartened by it. It's just a different chapter, but the markets will always be the market.